Hello, my name is Stephen Lazar from properT Network. I've been the director and owner for the past 18 years. My passion is helping my clients grow and secure wealth through educated and astute decision making, using investment grade property as their preferred investment vehicle. I welcome you to our latest informative video blog on SDA property. How we work is when we have a clear understanding of what you, our client, is looking for, your purpose for the investment, and your reason why. We then match a selection of best fit properties to your investment goals. Of late, there are now a plethora of sales groups and marketing groups, even mortgage brokers out there pretty much spruiking NDIS properties, jumping onto the bandwagon to earn a fast dollar. Sadly, readily able to sell you, their trusting investor, anything, and in locations with little to no demand or high supply already. It's a sad reality which you want to be made fully aware of. Revisit our previous videos and blogs, and you'll note that we mentioned a statistic of around 80% of what is being touted out there to investors just like you should not be. We warned and we continue to caution that just because someone is selling it or can build it, that it does not mean that you should be buying it. It certainly does not mean that they should be packaging it up and selling it to you with limited or zero regard or accountability. This is even more applicable today with the plethora of these groups flogging SDAs. Now, with your permission, I'd like to explore an important looming problem, which you may not be aware of. In our previous blogs, we keep mentioning SDAs being sold into the wrong locations and investors buying them based on yields on paper. Yeah. Now, there's a marketing machine in the SDA space who states that he only does robust, and he pretty much states that he pretty much does way more robust than all others combined. And he does so because, according to them, robust has a significantly higher number of participants out of the 4 disability categories of NDIS participants. Have you seen their marketing videos on this? Yes, very smooth and impressive videos in marketing, for sure. So, what you're not being told is what is on the other side of the very same coin, and that is, when you combine the other 3 SDA categories, aside from robust, combined, they substantially have way more participants than robust does. And the income levels for the lower categories are just a small percentage below robust anyway. What this means to you is your return on investment will be similar, but your risk of sourcing participants is lower. As per a recent NDIS industry analysis, figures presented that are shared by an industry expert who analyzes data on behalf of corporate and industry funds wanting to build larger SDA projects. The table above demonstrates that robust is a mere 8% of demand, and the other categories combined, participants who can share and do share, make up 92% of the demand. We openly challenge and question the statement being espoused that robust is the category with the highest number of participants. That marketing machine, even if the others combined were just even a mere 60%, is still not offering you accurate market data which is supplied by the NDIS. His videos state openly and blatantly that robust by far is the largest SDA category and in short supply. Really? I just had a thought. If they're that huge in supplying robust, isn't this creating competition for you, their very own clients, selling so many of them? You may not be aware that it is exceptionally rare that any other category will or can share with a robust participant. Even robust participants cannot share with each other majority of the time, yet the other 3 categories easily share with each other, and they do share, thus offering you further risk mitigation for your investment. Having access to a wider target audience of SDA participants amongst the 3 other categories. Even though The NDIS stipulates that a robust dwelling needs to be built for 2 robust participants, which flies in the face of logic because of behavioral issues amongst participants occupying robust SDAs, which primarily only occupy 1 participant. Did you know this?
This marketing machine states that Robust represents a good 20% of participants and that the robust housing market is desperately undersupplied. Then they go on to brazenly state that they've provided the market with just over 60% of all robust in Australia. We are led to believe that this is primarily in Queensland, though. They also misquote high physical support being only 6 to 8% of the market without providing any evidence. And they quote, "You don't need a Nobel Prize in economics to recognize this oversupply of high physical support. It is imminent, and there'll be a lot of disappointed investors out there," they say. So I challenge this bold statement of theirs. Again, they quote, "They could have kissed the company saying that Robust is a big disaster and that you shouldn't do it," which he claims has resulted in it being a spectacular gift for his clients. But we know any savvy investor will recognize that this sales group has potentially oversupplied the market with Robust by themselves. If they have supplied 60% of the Australian market, and as per the NDIS statistic, Robust only makes up 8% of all SDA's demand, the potential for oversupply in Robust is very high. By the way, these quotes come directly off their paid for marketing videos on Facebook and is not a personal attack on anyone in particular, just commenting around comments they've made publicly. You may not be aware of what the vacancy rate or occupancy rate of robust SDAs are in the market. The vast majority of robust SDAs tend to occupy just 1 robust participant per dwelling, according to the statistics put out by SDA providers managing these properties. Some even quote as high a figure as 90% of robust homes only ever occupy 1 participant. This is due to behavioral issues, participant protection from one another, or carers' safety. This is a very important statistic that you would want to be aware of, yes? To further compound the robust occupancy concern, this statistic indicates that you will thus have a lower yield from your investment. That is, income from only 1 participant in a home built for 2 or more robust participants, leaving you around 50% short on the tabled income that the sales company told you you'll be getting when they sold it to you. Isn't that what excited you and helped you make your decision to do so after all, to get 2 incomes? How happy will you be with your investment knowing you may only ever attract 1 participant, yet had increased building costs to cater for 2 and thus a lower yield and return on your investment? If you signed up for the 2 incomes, and if you knew this statistic up front, would you have committed to this investment knowing what you know now? Are you aware that the opposite is true for high physical support builds? The industry statistics demonstrate that NDIS homes catering for 2 or more participants attract on average 2 participants per SDA home of either the high physical support, improved livability, or fully accessible categories, or a combination of either category. So we do question the style of marketing, and rightfully so, as it impacts you, the investor. When a company tells you, the investor, what you think you want to hear without being transparent, upfront, and telling you like it is in the marketplace with robust homes. As the investor, ask yourself, would I have committed to this investment knowing what I now know? So where does this leave you? Having more insight into robust SDAs and the high chance of ever only accommodating just 1 participant, and thus generating around 50% less than quoted you would be achieving. Is this what you have signed up for or will sign up for? In summary, one needs to build for 2 robust participants to meet the SDA pricing arrangements set down by the NDIS, there is a strong likelihood that you may only ever attract one robust participant into your investment at a time. This is reality due to behavioral issues where the market statistics demonstrate 90% of robust homes having single occupancy. And we know that robust cannot share with other categories. But high physical support, improved livability, or fully accessible can share with each other, thus strongly widening your rental pool for participants and multiple occupancies, and thus a higher income on your investment into NDIS property for you. Looking at the NDIS table, as per requirements when building for robust participants, we know we need to build for 2 participants. The yellow highlights indicate, firstly, the 2-participant home, and secondly, the $156,000 per annum you could be getting in potential income. An income on robust such as this is what you may have been quoted by the salesperson, and it is the same number of which you would have based your own investment decision. Is that correct? Now, let's break this down and physically compare investing in HPS home versus investing in a robust home, where we know that the market statistics validate that there is a very strong likelihood that under HPS you will on average have 2 participants sharing the home. And we know you can mix it up with either fully accessible or improved livability. A mix of these categories can and do share. And on the other side of the same coin, we know the same market statistics demonstrate that the vast majority of robust SDAs have only 1 participant, as mentioned previously. In a robust, that's built for 2, hence only 1 source of income for that 1 participant. You would agree? Yes? Thank you. On the table, we've used Ipswich as a location factor. And if we look at 2 times HPS, you could achieve $165,000 per annum. 1 times HPS and 1 times FA, you could achieve $154,000 per annum. Or 2 fully accessible, you could achieve around $143,000 per annum, which are all very healthy yields. When compared to a probably 1 times robust participant, you may only receive on average $78,000 per annum. What this could mean to you over the life of your investment into an SDA home, if your choice is to invest in an NDIS home for HPS category, the financial difference in your pocket at a mere 1.5% CPI inflation rate over the life of your investment, which is a 20-year program, you could have generated and earned yourself a whopping $3.9 million of NDIS income. And now, if we look at the robust over the same period, you would have earned around $1.8 million of NDIS income if you accommodated a single robust participant. That could be a substantial $2 million more income in your pocket on your HPS investment with 2 participants compared to a robust dwelling. An obvious and a very valid question is, how would another $2 million of income positively impact your financial well-being today and at retirement? And in fact, the potential massive positive financial impact on your next and next generations. What difference would another $2 million make for you in your life? The purpose of demonstrating the numbers to you, which will drive and underpin your investment, is to offer you insight, and more importantly, to demonstrate that one needs to be very mindful of who one listens to. So, when a sales company openly and irresponsibly publicly brandish questionable numbers as a sales technique to appeal to your greed, this raises concern, and rightfully so. It is then the responsibility of ethical groups such as ours to exercise our moral obligation to raise your awareness as to what is being presented to you as fact by them, urging your caution and the need for you to ask hard questions of them. Sharing what we now have using verifiable NDIS published data, you may now realize that what the sales company has shared with you in terms of your potential income is income on paper only and far from reality. Has this offered you sufficient insight so that you can now know what to ask, and so that you can now make an informed investment decision? We hope so. If you're still uncertain, reach out to us to discuss. Think about it. The extra income you could have earned on the same investment using a slightly different strategy by building for a different NDIS category, how this could allow you to secure a second or a third NDIS property a lot easier and quicker when you get your decision correct from the outset and your cash flow has improved. The immense positive impact this will have on your current financial destiny and that of your next and next generations is life-altering.
I'd like to reiterate and clarify things about Robust. Robust SDAs are very much needed, and we do advocate that investors build them because Robust participants are really in need of accommodations. And we urge you to build to the correct and required specifications, those that are above minimum standards, advocating that you build in locations with demand and low supply, where you would expect a lower income if only you ever attracted one participant into the dwelling. Doing so will lower your ongoing maintenance costs whilst ensuring you keep your participants around for longer when you build above minimum requirements. Locations where there is demand and low supply will be locations that are closer into regional CBDs or other CBDs where land is more expensive, further mitigating your risk and measuring your reward for doing so. As a moral investment, Robust is certainly very, very much required, as are all other categories under SDA. Keep this in mind when you're comparing.
A highly regarded and leading SDA consultant in Australia recently quoted, "Most robust SDA properties being delivered to the market are falling short of meeting the requirements of participants, care providers, and investors alike." They go on to quote, "This is because there is minimal understanding of the requirements of participants and little thought has been given to the design of the dwelling and the location. Instead, we are seeing standard home designs being adapted to the requirements of the SDA design standards and thus delivering a poor result." Another issue developers and investors face is that the SDA design standard includes few prescriptive requirements and guidance for developing a robust SDA. We also see substandard products used in the builds that only meet the bare minimum robust requirements, and so they do not perform as required. properT Network continue to see that as an investor, you are generally being sold the bare minimum requirements as per NDIS guide. The ethical side of the industry recognize that this is at your expense due to ongoing upkeep of your investment and also the sanity of your participants and the needs of your carers, resulting in participants leaving the home and causing damage.
We have previously blogged about building robust SDAs to demonstrate that the design must use resilient but inconspicuous materials to reduce the risk of injury, minimize neighborhood disturbances, and cope with heavy use. This includes secure windows, doors, and external areas, high-impact wall lining, fittings and fixtures such as blind and door handles, soundproofing, and laminated glass. The design should also include adequate space and safeguards to support the needs of residents with complex behaviors and provide areas for retreat for other residents and staff to avoid harm. This includes impact-resistant wall lining, solid core doors, vandal-resistant door hardware, laminated glass or polycarbonate, resin thermoplastic materials to windows, vandal-resistant door hardware, heavy-duty joinery, sound insulation to bedrooms, additional egress doors for staff safety, etc. As a market, we know that the majority of these standards are not being met or delivered. This is resulting in high ongoing maintenance for investors such as yourself. Is that what you have signed up for and are going to sign up for?
Below are just a few live examples of damage caused by participants in robust homes, where lower grade bare minimum requirements were met at your cost. Yes, cheaper upfront presents a great yield on paper, but what about ongoing maintenance issues? What would the ongoing maintenance costs be to you over the life of your investment? Give consideration to participants moving on because of inadequate and unsafe design and materials used, possibly missing out on SDA income when they do, or having costs passed on to you for finding that next participant. These costs eat into your investment, meaning a lower income for you over the life of your investment. And if you only ever attracted and accommodated one robust participant, you've already started your investment out on the back foot. You would have to agree? Please, we urge you to be very mindful when considering investing in a robust SDA home. Take all consideration. Set aside greed for quoted potential income on paper. Look to the market for a realistic, probable outcome, not what a salesperson is telling you that you want to hear.
The purpose of this video blog is to raise your awareness levels that just because someone is selling an NDIS property, just because the yields on paper look so good on the tables, just because they're quoting or misquoting demand for SDAs, this does not by any means mean that you should invest in it with your own hard-earned dollars. And when they present you with a package, ask the hard questions of them, or send them to us for your review on your behalf. We're highly proficient and knowledgeable in this complex space. SDA property certainly does remain an incredible initiative and a brilliant do-good investment, but only when you get it correct from the very outset. Sadly, the NDIS is a growth industry, and as our population grows, so does the level of people with disability. So does the level of those under the NDIS who qualify for specialist disability accommodation, and thus could become your participants. When you build with a participant first and foremost in mind, when you're not chasing the yields on paper, when you're building a robust to a decent standard on a decent floor plan, your participant will come. Either you're an investor who's attracted to those yields on paper, which is short-term greed and is going to cost you a lot of money, or you're deciding up front the opportunity is very real and strong, and there's a huge need for SDA properties, and you're wanting a healthy yield and you want to mitigate your risk. If you're that type of investor who wants to mitigate your risk and focus on that healthy yield, we are the right company to work with you. Reach out to me for a conversation. My details are below. Email me or call me now. We deliberately elect to remain highly ethical to our core. This is not about us. This is firstly about the participants, and secondly about you and your investment. Invite us to help you mitigate your risk so that you can make that informed decision as to whether SDA suits your investment strategy, and if yes, which SDA property is a sound fit for your requirements and the purpose of your investment. Invite us to work with you and provide you a selection of best fit NDIS properties to meet your NDIS requirements, strategy, budget, and purpose for your investment. This is Stephen Lazar, the director and owner of properT Network, signing off. Looking forward to catching up with you. Have a beautiful day.